All right, after watching every single episode, this is probably going to be the most important part. All right. How do you create your own trading plan? Here's it simplified. Step one, find where stop losses are going to rest. The biggest thing I look for is equal highs, equal highs, equal lows, data highs, whatever. Like, also LRLR. Okay. To recap, LRLR equals, let me just draw this out real quick. It's just LRLR stands for low resistance liquidity, which also is trendline liquidity. It's the same thing. So if you ever see like a build up a trend line, like, and I mean actual real, like this is not count. This is way too steep. It's not perfect. I mean, perfect would be like touching this like 50 million times. This would be trend liquidity, not this crap. This is just not it. I'm talking about like this. This is trendline liquidity. This is perfect. What else? Like, let's see if I can find another example. Give me one second. It has to be just perfect. I'll find one. Don't worry. Oh, this perfect. Just a beautiful, lot of touches, lot of stops, like just engineered perfectly. Like that's trendline liquidity. So that's what LRLR is when I refer to that. So my step one to create a trading plan is find where a bunch of stop losses are going to rest. Equal highs, equal lows, data highs, LRLR. Those are the three main things I use. I don't really use London highs that much. I'm not going to lie. Usually when I use London highs, it's usually equal highs, data highs, or LRLR. These are the main things I use. Now, so now you want to find a way to get there. How are we going to get there? What entry model are we going to use? So step two is going to be use an entry model. And then step three is scale a long way and manage risk. Simplified, this is what your plan's going to basically be. So my entry model is IFVGs. I'm just going to write what I do. Your entry model could be breaker blocks. It could be mitigation blocks, which I do not recommend using mitigation blocks. It could be order blocks. It could be order blocks combined with their IFVGs. You can combine them. You could combine breaker blocks and IFVGs. There's so many opportunities. All right. So use an entry model and then scale along the way and manage your risk. All right. So what does that entail? Well, let me show you a few examples. So interestingly enough, I came into the market today and I was bullish because I saw this trendline liquidity. I felt like there was a lot of stop losses that needed to be run here, and I was bullish. Okay, so I'll show you exactly what happened. There's a recording. I'm not going to show you guys a recording or anything, but I came to the market bullish, and I came on voice chat at about 9:10. So about right here, I came in the voice chat, and I'm like, hey, I'm bullish. We have a bunch of stop losses resting up here in form of a trend line. I figured we're going to run it. Now, let's look for some entries. Well, we don't really get any good entries. There's not really any major liquidity sweep here. I'm not going to lie. There's no manipulation leg. There's just a manipulation leg has to look good. And this is just forming a bunch of higher lows. And I don't like when we form higher lows without like a sweep of some sort, because you got to realize when we're forming these higher lows, we're just engineering more stop losses below these higher lows. You want to see us like do this, where we get a wick down here. So then that way you're not like, these stop losses have been ran, or some of them, maybe not all of them, but some of them have been ran, and then we'll go up. And we didn't really get that. So I didn't like this for a rally gap for that reason. And first of all, I don't really take bullish for rally gaps. I take inverses. And then all of a sudden, right here, I see, oh, well, we create equal lows here. So now all of a sudden, I've got two different liquidity pools, both of the highs and the lows, that I'm like, okay, oh crap, this is now 50-50 because I can see this going both ways now. But here's the important part. The important part is I'm looking for places where the market might be likely to go. Now I have kind of two areas. So I kind of just keep watching. I went to this one, I went to the 2-minute, and I see a bullish fair value gap in the 2-minute. Now, as you guys know, do not long fair value gaps blind. Like, I just will not long a fair value gap. It has to be an inverse for me, personally. So I did not long this, but it did work at least to the internal high. So let's say you take normal fair value gaps. Let's say you think we're in a bullish trend. You think we're going to go higher to this high, so you long this. What would happen is, well, we hit that first target, that internal high, which internal highs and lows are very important to scale at. Just very important. As long as they're more like than 10 points or above obviously 10 or 1R. But you can see if you took this, it would have worked out nicely. It would have been a scale half and break even trade. I did not take that. That's not my model. That's okay. So I don't take a trade here. I don't see anything that kind of follows my plan. And I'm going to be completely honest with you guys, right? You're in my head. I'm picturing all this in my head. You're not, because you haven't traded. You don't know this. I'm telling you, you need to see thousands of setups play out before you really get good, because you're going to visualize it. Like, I guarantee you, if you come back to this video in 2 years after seeing hundreds and hundreds and hundreds of setups play out, that's a model or the market just in general, you're going to be able to visualize exactly what I'm talking about. But right now, you're probably not going to be able to. Anyways, I saw this 2-minute fair value gap. I know we had equal lows here. So I'm like, I'm now going to take a short if this 2-minute fair value gap gets blown through. And we started getting blown through, and this is a bad example because you got to wait for the close, and I actually entered this early. And I will enter early sometimes if we perfect equal lows, because once the momentum starts towards equal lows, it will typically not stop. I kind of entered a little early. I kind of saw how the market kind of started knifing through this, and I took a nice 15-point scalp to these equal lows. So today was a day where I identified 2 points of liquidity here, this trend line liquidity, which is not fully ran. You can see maybe some of it was ran, but not fully ran. And I identified these, which happened to form after I started looking at the market. These weren't here when I started looking at the market. So that's all I needed to be profitable. That's all I needed. Now, if we want to go further in depth, we swept these equal lows, barely got any displacement under them, and then we inverse this 1 minute. Here's another long setup. Why would you take this? Well, earlier when we came to the market, we identified that there's a bunch of trendline liquidity up here. So, that being said, you might take this thinking we're going to go finally target that. So you take the trade, right? And you scale some along the way. Maybe you scale some at this swing high here. And then all of a sudden we come down again. It's another break-even trade. But the plan you're creating of your entry model, or for me personally, is we got a sweep here. We got an inverse here. It looks pretty good. We got stops that need to be run up here. Those are the 3 things I'm really looking for. Some sort of decent sweep, some sort of stop losses that need to be ran, and then my entry model, which you can see this actually would have been an OB and an IFVG. Look at this. This is a down close candle and a run up. So you can kind of see that's my entry model. Like, those are the 3 things I'm looking for. So now let's go into yesterday, right? This is Monday. So Monday, come to the market, and let's just go back a little bit. I was actually bullish here, believe it or not. So to me, the 5-minute seemed like a market maker buy model here. So I kind of thought the draw on liquidity was going to be this high. So I kind of come in bullish here. So I now go to the 1-minute time frame to look for a more precise entry. This is what I do every day. We got our buy side liquidity target here. Now here, what I'm kind of looking at is I'm waiting for some sort of sweep and some sort of inversion for a value gap. If I'm bullish, I want to see a sweep to the downside. I kind of see these relative equal lows down here. They look good to hit. That's fine with me. So I play some candles. Okay, we swept these lows. This inverse fair value gap looks really good. So automatically in my head, I'm like, okay, this would be your sweep. This would be your Judas swing. And then I target this. And that's my plan. I'm targeting stop losses where I think stop losses are going to be. And again, some of you aren't going to be able to pick up this high. That's just from years of experience, which you're going to learn. But I see a sweep of liquidity. I see we kind of run stops here. Now I'm going to look for an inverse fair value gap, and that's going to be what I look for. Oh. But we never inverse it. So I just don't get my model. Okay, so this is a situation where now we've dumped too much. We've dumped so much that, remember what I said about the manipulation leg. Never take the first setup or the first fair value gap you see after we dump this much. You want to wait for a manipulation leg here. And I told this everyone in live stream, in my stream. So we kind of just, we see fair value gap here. Do not take this though. Remember, you want to wait for us to see like another low day. So here we go. Here's another low day sweep. So we see another low day sweep. Okay, I'm going to now try this one if this inverses, because I still have the same bias as before. I'm going to try this one. And in this situation, I honestly don't need to target this high. This risk reward is just, I don't need this risk reward. I'll maybe target like the 50% retracement. So if I draw from premium to discount, like the market a lot of times likes to go to that 50%. And this would be about, if I had to guess, give or take about a 1.5R. So maybe I'm just going to target this. That's fine with me. Now, have we swept some sort of low? It looks to me as we kind of swept a good amount of lows. I mean, I think this is fine. We got kind of triple equal lows here. So we have swept some sort of liquidity. And we do have a manipulation leg. And we do have a singular bearish gap that I would just not expect to be a short. Now, what if we did reject this? Oh, I don't care. It's just not a play I'm going to take then. I'm not going to short this low. That's not my plan. My bias is bullish. I'm going to try to long. I want to see momentum through it. Is it SMT? Let's see. If we go to the 1 minute, I think it was an SMT. Oh, would you look at that? Look at this. It's also an SMT. See this? See how ES never actually hit the low, but NQ did? So at this point, I got like 3 confluences. We're very low. We swept a decent amount of sell side. It's not perfect. We have an SMT. We have a bearish gap. If this gets violated, I'm in. All right. The body closes above. The wick doesn't matter, remember? So I'm going to take the buy. Target maybe the 50%. And boom, right there, sell. Only need a piece of the pie to be profitable. Even if we keep going higher, do I care? No, that was a good enough RR for me. So ideally the main plan, like you need to create your own trading plan. I'm showing you what I do. It's ideally just looking for a few different confluences, whether it be an SMT, us sweeping sell side, us being in discount. Like I don't even think we were in, like there wasn't really any good discount dealing ranges here, honestly. We never hit discount on the higher time frame. I mean, if you draw from this swing low to this swing high, yes, we did hit discount. So there's a tiny little sneaky 15-minute swing low down there. So I guess we were in discount. So we're in discount. We have an SMT. We have a singular bearish gap that a lot of new people are going to short because they're a little big. Oh, we dumped so much. We're going to keep going down. This is a supply zone, whatever. They're going to short this. I'm going to long it when it breaks, and they're going to get wrecked. Now, if it doesn't break, it doesn't break. Then I don't take it. But I'm looking for liquidity sweep. I'm looking for manipulation. Like, I'm looking for where stop losses might be. And remember, even if the market was still bearish here, we still have to go higher to go down. Because remember, $1 million of shorts just can't get in at the lows because there's not enough people buying. Like, you got to have buyers for shorts to get in. That's how the market works. Where's the most buyers going to be? Well, the most buyers are going to be when we start going back up because everyone's going to be like, oh, I'm going to buy now. We're going up. It's an uptrend. That's when shorts load up because they had the liquidity in order to go back down. So even if the bias is still bearish, this is still a pretty good play because we're still relatively low. We still swept some sort of sell side, and we're targeting either one liquidity or maybe a discount or premium of the range because the market loves to retrace back to that 0.5, all right? So that was my trading plan. I may now be just done for the day. There's honestly no need to trade anymore. So I kind of just play price, and I'm thinking, okay, yeah, this price action is trash. So I'm actually done with that day. I took my win. I'm done. So let's go over one more. All right, down here. I come into the market. I wake up. I wake up at about 8:30, 8:40. I come into the market. We'll go on the third. I actually did trade this. I took this in live time in my stream. And I see, okay, we got a pretty good data wake up here off of news. So my plan right now is I know where stop losses could rest. So I'm going to draw this buy side, this sell side. I'm going to see if we get some sort of sweep and then some sort of reversal setup that might be an inverse fair value gap. So we kind of get this. Okay, we swept this low. Don't really like too much here yet. So this lower, just keep going down. I'm gonna see if we get like maybe a manipulation leg over under this low. Maybe we'll get like one more sweep. Ooh, okay. Automatically, this candle interests me because to me this looks like a lot of people getting wrecked and a lot of people trying to like. How many people do you think, like, if you were new in the market, would you short this? Yeah, probably, because you're like, oh my god, we're dumping. We just hit low a day, breakout trade. Let's go. We're gonna short it. So to me, this kind of automatically just there's a light bulb in my head. Okay, rejected it. Ooh, look at this candle. Look at that. Immediately when I see this, I'm like, okay, we're gonna wreck all the breakout traders out here. We just swept more sell stops. This is where I'm gonna buy because it's like, okay, this is my model. It's an inverse fair value gap. We closed above it, stop loss below, and I think we're bullish because we've data highs here. Do I need to target these? Not necessarily, but I know it's good. I know 90% of the time we'll go and target that high. But maybe for the time being, I'll just target like this high. Just take a piece of the pie. That's fine with me. Play price. Let me move my stop loss and take profit. And boom, there it is. So that's all there is to a trading plan. I identify some sort of high or low I think is going to be swept. And that takes sometimes years of experience to know. You're going to get it maybe at first a couple days, but not every day of the week you're going to know. And then second, just use your entry model. My entry model is IFVGs. I look for a sweep. I look for an SMT. I look for a bounce off of a higher time frame fair value gap. Maybe there's a fair value gap to the left over here. And then I look for my little confirmation model, like my model off of a higher time frame, whatever. I look for all these things that have to do with my model, and that's that. Now, what if you were a breaker block trader here? Well, what you do is you'd wait for a market structure shift or something, and then you'd long this pullback because you can see this is a green candle. It's an order block. I would not expect us to reject this because clearly we're too low. Clearly we have data highs above, which you can see there was no data lows, and obviously the lows are swept. So why in the world does it make sense to reject this fair value gap if we've already ran so many stops here? It just doesn't make sense logically. So I might take a entry in this fair value gap, which also lines up with a breaker block right here. And that might be my trading plan. Okay, but even though it's not my trading plan. So I might take a buy here at this breaker, and then that's my trading plan. And then I take a piece of the pie. Maybe I target data highs. I'm going to be honest with you guys. If you're newer, it's going to be hard for you to hold this high all the time. When I was new, I could barely hold because I didn't trust anything. I needed to see it play out millions of times first. Now that I've seen us hit data highs a million times first, I can definitely hold a lot longer. But you're not going to be able to hold that long when you're first starting. I'll guarantee you that. So you can see there's a breaker block model. There's an inverse model. There's a normal fair value gap. We sweep sell side, then bounce out the fair value gap model, right? Now, sometimes there's going to be an inverse fair value gap model, but not a breaker model. Sometimes there's going to be a breaker model, but not a inverse fair value gap model. And yeah, you're drawing liquidity, maybe, right? But do not get in if it's not your entry model. Don't just start taking breakers one day and then inverses the next day. Try to stick to the same model. It will suit you well in the long run. So again, all you're looking for is some sort of model, some sort of liquidity you think is going to be hit, which I'm telling you, data highs, data lows, equal highs, equal highs, or equal highs, equal lows. And then what was the other? Oh yeah, trend line liquidity. Those are the three main ones I look for pretty much. So that's kind of what I like. So those are basically the 3 steps in the creating your own plan. You saw my plan. You saw how I trade my plan. Again, 3 simple steps. I think the hardest part is just going to be like taking good setups for your model. I already know what a good IFVG looks like. You may not know what a good breaker block model looks like. You may not know what good displacement looks like. Obviously, this is very good displacement, but you're going to need to figure that stuff out through screen time. So that's going to be it for this video. This is going to tie everything together. The one thing I would recommend is don't just use 50 million things. Don't use IFVGs one day and then just a propulsion block the next day. The only thing 2 things I'll use is order blocks if they're combined with an IFVG or just an IFVG. But everything starts with an IFVG for me. That's what I do. Okay, so that is it for now. I'll see you guys later. Peace.